Doesn't want to play.
Won't.
So there you go.
Okay, so look, it's time to welcome Rob Lees back to the show from Mortgage Choice Blue Mountains and Penrith for our weekly finance segment. And Rob, today we're going to look at some current economic issues.
That's right. That's right.
We are.
Yeah, we are.
Vent.
Yes, and we're back in the room. Okay. Now, so Rob, there's been a fair bit of turmoil in the share market. Toil and turmoil around the share market in recent weeks.
There's a lot of analysts, toiling with their fingers.
Yes. Okay, and we're back in the room. Okay, Rob, can you please explain to our listeners a little bit about this turmoil in the share market and why it is, and should we be worried?
Yeah, I'm not sure if you've been tracking what's been happening with the Australian stock market. You've been reading about that on the weekend, Vent?
I didn't this weekend. No. I was toiling soil this weekend. In fact, from the front yard to the backyard.
Okay.
Yeah,
probably a good idea. But it's
Sunday snooker day.
Toiling soil.
It's lost a bit of ground. Probably at its height, the Australian index was round about, didn't quite make it to 6,000 points. I think it was about 5,900 or thereabouts at its height. And I checked this morning and I think it was sitting at about 5,006. So we haven't gone below 5,000, but that's a fair bit of ground that it's lost. I think that's a rough calculation to be around about 15%. So it does mean that if you're a direct share investor, you will have lost some value in your shares. But more particularly for most people, we have superannuation investments, and it means that our superannuation funds won't be worth quite as much as they were 2 or 3 months ago. So that is concerning for some people. The reasons for it are that we've just got a very soft economy at the moment. It isn't growing at the rate that it should be growing. We've only had about 2% growth in the last 12 months, and the last quarter it only grew by 0.2%. And it was really only New South Wales and Victoria that had any growth at all. So during the week, on the weekend, in the weekend papers, there were people arguing, while a technical recession is not until we've had 2 quarters of negative growth, they're saying, well, from a practical point of view, are we really in recession if the other states of Australia haven't had any growth? So that's happening, and of course the problem is we're still coming off the mining boom. The mining boom or the resources boom is winding down.
China's
other
making people nervous.
Yes, China's not having the same level of demand for goods and services. And while we've got some growth in a lot of other industries, it's just not enough. So it's just coming off the boil, and so things are a bit soft.
I mean, it seems like only yesterday we went through all this.
Yeah, that's right.
What's going on?
There's not too many.
Some people.
You can get out there and spend your money. One for the country. Hey.
Yeah. Well, Rob, so the Reserve Bank's decided to keep interest rates on hold again for the 4th month in a row. Could you just background what were the reasons for this, and where can we expect interest rates to go in the future?
Yeah, as far as interest rates, same sort of thing as the last few months. I mean, they've kept on hold for 4 months in a row now. And the reason
too bad if you've got money in the bank, isn't it?
Not very good if you've got money in the bank at all. Good if you've got a mortgage. But the Reserve Bank board have seen an increase in consumer sentiment, which is a good thing. We are getting out there spending money, which is a good thing. Some encouraging signs in the domestic economy. So non-mining industries are growing, so that's good. And so they've decided to keep it on hold. And of course, the big issue for the Reserve Bank is they want to stimulate the economy, but if they do so, they could put more heat into the Sydney market, which they don't really want to do. So it seems easier to leave rates on hold. There's still economists that are predicting we'll get another rate cut before the end of the year. But they're not all in agreement on that, and economists, some of them still believe that we'll have this low rate environment for till about 2017.
Yeah, and of course I guess people's spending patterns over the Christmas period is going to be quite telling as well, isn't it?
Yeah, well that will stimulate the economy. I mean, it is spending that does that, and that hopefully will bring about some improvements.
All right, so just a quick message to all our listeners out there. Get out there and spend your money. Spend $1 for yourself and $1 for the country.
And what I was going to say before regarding the share market, again, should we be worried? Should we move all our investments to cash if we're in superannuation? I think the message I want to say to people is don't jump in and do that, because if the market's down, it's the wrong time to move, and you'll miss out on the bounce when it comes back up. And again, it's predicted that it will come back up again slowly, and we can expect a higher index by the end of the year.
All right, thanks, Rob. We're going to have another music break now. We heard Perfect Day from Lou Reed a little earlier on, and this is now U2 with Beautiful Day.
U2. Oh no.
Oh, keep going.
U2 with Beautiful Day. And we're back with Rob Lees from Mortgage Choice Blue Mountains and Penrith. See that nice fade out? I'm talking over the top of it. It's a bit of a trying to get professional there, aren't we, Van? Rob, the recent crackdown on the banks by APRA, the Australian Prudential Regulation Authority, has continued to be in the news. How are the banks responding to this, and what impact is it actually having?
APRA seems to be quite happy with the impact, and there has been, I think, statistically a little bit of a slowdown in investment lending, but there's a lot of talk in the media and certainly within in our industry about the move by APRA, and a lot of criticism of that move, and I'm inclined to agree. There's a very real danger in applying a national remedy to a problem that is not national. Really, it's only the New South Wales market or the Sydney market that's really strong, and the rest of the market throughout Australia is actually quite weak. I've got a friend who is a real estate agent in Perth, and I was talking to him during the week, and he was saying when it comes to, like, the market's so slow there, and when they finally sell a property over here, you sell a property and people say, thanks, it's a great price. When he lets his clients know they've got a sale, the response is that all you could get for it? So it's a very different world, and I think I think there's problems with this strategy because it's slowing down the rest of the property market in Australia, whereas that property market needs a bit of stimulation. So the banks are still responding with increasing rates for investor loans, reducing LVRs on investor loans, that's the loan to value ratio, making the criteria a little harder. But the flip side of that is they've also reduced interest rates on owner-occupied loans. So the gap between owner-occupied loans and investor loans is a lot broader now.
So I guess also the difficulty is that as a government, I guess you can affect housing prices on a state basis or on a national basis, but where you've got a hotspot like Sydney that's pumping away and everybody else is not doing so well. How the heck do you affect those markets?
I don't know
at that granular level.
If it's possible to just have those restrictions applied to New South Wales, I don't know. But Sydney again is different to the wider regional market too. It's a difficult one, and we'll see how it goes.
All right. Well, Rob, thank you again. That's Rob Lees from Mortgage Choice Blue Mountains and Penrith, and of course you can contact them on 4739 9749 or visit Rob and his staff at their offices at 3/13 Hope Street in Blaxland. And Rob will, of course, see you again next week.
See you next week. I look forward to it.
Catch-up.